Hello and welcome. You tuned into Market Cafe. I'm Ankita Saxena with me, Shrishti Sharma, and it is a fresh start to the week. And before we get started with telling you all the cues that you need to watch out for before the start of D Street, let's take stock of how the global markets moved. The GIFT Nifty, as we see, shows an implied start of a downtick of almost more than 0.5%. So cuts coming across. In fact, even in the US market, as we can see, a slew of comments by Donald Trump that weighed in on the markets. In fact, the S&P 500 ended Friday just below the flat line and posted a losing week as traders weighed the latest comments made by President Donald Trump related to Federal Reserve and the geopolitics. Now, the broader market index slipped 0.06%, and the Nasdaq Composite 2 inched down 0.06% to settle in at 23,515. The Dow Jones Industrial Average fell 83 points, or 0.1% downtick coming in on Dow Jones as well. The three major averages hit their session lows after Trump delivered remarks in the White House on Friday, in which the president said that he'd rather have National Economic Council Director Kevin Hassett stay in his current role and that he might not be chosen to become the next Fed chair. And besides that, there were a couple of other news flows coming in as far as the tariffs are also concerned, tariffs in the NATO countries that will be implemented from the 1st of February. So a couple of commentary that came out of US President Donald Trump that really weighed on down the markets, and US markets ended with cuts on Friday. And for the Nifty as well, the implied start shows a cut of almost 0.6%.
All right, so that's about the US markets as of now. Even US futures are seen to be declining almost 300 points. But yes, of course, with respect to the commodity world, interesting actions over there because the safe haven demand is seen to be coming back with respect to the gold as well as silver prices. Gold as of now is higher by almost 2%, while silver has inched up 6%. But other than that, it is the commodity basket with respect to the crude that is trading absolutely flat. So no major movements when it comes to the crude oil prices. WTI posts a weekly gain amidst the West Asian tensions. But as of now, Brent crude is trading absolutely flat, while silver as well as gold, the run-up continues and both are trading at their all-time high levels.
All right, so that's how the commodity is shaping up. But let's move on to the biggest news that transpired on the geopolitical front. The European Union is scrambling to avert the threatened tariff by Donald Trump linked to Greenland while preparing retaliation if the talks fail. EU leaders meet at an emergency summit on Thursday, weighing a 93 billion euro tariff package and even the bloc's unused anti-coercion instrument. Despite is to put into this, the World Economic Forum in Davos, where Trump will address the global leaders. However, Besson continued to warn that it was better for the US to make Greenland a part of the country amid the rising threats from Russia. Let's listen in.
The United States needs to be in control to prevent a war, and that we do not want to get dragged into someone else's war. The European leaders will come around and they will understand that they need to be under the U.S. security umbrella. What would happen in Ukraine that if the U.S. pulled its support out? The whole thing would collapse.
And U.S. Treasury Secretary Scott Bessent says that it is very unlikely that the U.S. Supreme Court will overturn President Trump tariff imposed under the emergency powers, calling them the president's signature economic policy. Now, the court could rule as early as this week on the Trump's use of the emergency tariffs as Europe braces for fresh tariffs linked to the Greenland dispute.
And the Trump administration wants countries to pay $1 billion for permanent seats on a proposed Board of Peace, according to a draft charter. Trump would serve as the inaugural chairman with final approval powers. The board endorsed by the United Nations Security Council is meant to oversee the Israel-Hamas ceasefire and the Gaza's reconstruction, with funds earmarked for rebuilding efforts.
And Canada and China have struck an initial deal to slash the tariffs on electric vehicles and canola, marking a reset in the ties. Now, Prime Minister Mark Carney said that Canada will allow Chinese EV imports at a 6.1% tariff, sharply lower than the earlier 100% in return, wherein Beijing is expected to cut steep duties on Canadian canola.
And Iran's president warns any U.S. strike would trigger a a harsh response as nationwide protests have reportedly killed at least 5,000 people, including 500 security forces, in the deadliest unrest since 1979. Tehran hinted its judiciary may proceed with executions of detainees charged under severe laws.
And from the world's most powerful boardroom in the Alps, ET now brings you in India and the world in conversation. Join us at Davos 2026 with global leaders, CEOs and policymakers shaping the next economic cycle. From Sir Martin Sorrell on the future of capitalism to Anisha, Girish Tanti and Nadir Godrej on growth, energy and global supply chains, with voices from finance, technology, sustainability and the government, including Ashwini Vaishnav and Smriti Irani. Stay tuned for exclusive conversation throughout the week.
And speaking of World Economic Forum that is underway in Davos, Times Network's Mihir Bhatt spoke with the World Economic Forum President and CEO Borj Brende on global growth, geopolitical, trade resilience and how the AI investment is shaping a cautiously optimistic economic outlook. Let's listen in.
Today, one of the challenges that any large global corporate is facing is they are continuously getting dragged into geoeconomics and geopolitics, and they have to shift their business strategy, they have to shift their supply lines. I mean, if you look at the count of number of corporates who have exited from China and vice versa, it's really a concern. So, I mean, what is your view on that as World Economic Forum?
We can look at it as glass half full or half empty. We were expecting much more of a slowing of the global growth than we have seen. This year we expect a little bit more than 3%. It's not like trend growth closer to 4% we had for decades, but with all the geopolitical turmoil, it's not bad. Trade used to be the engine of growth, and trade grew twice as much as the global growth. That, I think, is not happening in the years to come. But what we're seeing now, the trade is still growing. It's growing around 3%. So it's not stopping. So we are trading more with each other, we respect this year than we did last year. So that is important to remind ourselves about. And secondly, on top of this, we have $1.5 trillion being invested in AI last year. This will continue also this year. So a year ago, I would have been worried that we could see a decade of slow growth like in the 1970s. If there's no major wars and escalations with the new technologies, we could possibly also, if you want to look at the bright side of life, and that's also something we need to do, we can see decades of high growth because of the investments in the new technologies, increased productivity and all this. So I'm torn, but moving a bit more to the bullish side than the bearish side on the global economy.
Also listen in to what he had to say on the weaponization of trade tariff warfare and global trade fluctuations.
Are you concerned, Borje, about, for the lack of a better word, weaponization of trade or weaponization of tariff between countries? Are you concerned about that? Because it's in direct conflict with the spirit of globalization.
Since the start of the 1990s, we have had this globalization for 30 years. It doubled the global GDP. The extreme poverty in the world went from 40% to 10%. So it gave its benefits. But they also had challenges related to it. For example, many blue-collar workers in already industrialized countries and middle class got competition from emerging economies they didn't have before. You have to look at it in a broader historic context. Trade has always been fluctuating. We have been through a period of a lot of trade and opening of borders. Now we're in a different situation where also post-COVID, countries are not only thinking about just in time, but also just in case. So they're strengthening their supply chains. And then you have on top of it this friendshoring that some countries only want to then trade basically with what they define as friends. But that's also very complicated because, as I said, with US and China, they're already so interlinked. I think the same with the US and India are very interlinked. But that process of negotiations are still going on. And I thought by Davos that would have been solved. But let's see.
And well, with that, it's time for a quick breather. After the break, we'll get you more updates before the start of Indian markets. Stay tuned. Welcome back. You tune into Market Cafe with me, Ankita, and with me is Shrishti Sharma, and we're getting you all the updates from the markets all over the world. And now it's time to do a quick Asia check and how that will imply a start to the Indian markets as well. Now, Asia Pacific markets are mostly down and out in the market, and especially after the investors are assessing the threats from Trump administration about Greenland over the weekend, and they look towards the key economic data that is likely to come out of China as well. China will release its fourth quarter GDP numbers along with the December figures for retail sales, urban investment and industrial output. So that is a macro data that we are awaiting out of China. And as of now, you can see Hang Seng that's down 0.7%, 210 points down on Hang Seng. Shanghai also trading with cuts of 489 points, 0.2% downtick coming on Shanghai as well. We also have Nikkei that's seeing the largest cut right now. It is down 1.3%, 750 points down on Nikkei. And remember, we do see the yields of benchmark 10-year bond yield of the Japanese government bond yield that has climbed 2.2%, and that's the highest level that we have seen since 1999. Now remember, it is inversely proportional to how the markets move. The bond yields ticking up means the market going down, and therefore Nikkei is trading down almost a 1.3% in the trading session. We also have S&P ASX 200 that's down 0.3%, and KOSPI that is the only index that is trading in the green. It is flip-flopping between the red and the green. It is very, very flat right now, though it is managing to hold on to a shade of green there. That's trading up just marginal 8 points up, but largely it's a sea of red that we see coming in, and the GIFT Nifty is also trading down now 0.7%, 184 points is what we're expecting for Nifty as well.
All right, so that's about the Asian check, but let's get back home, and there indeed are a lot of stocks that you should be watching out for in today's trading session. And firstly, let me take it across to Meryl, who's standing by with a list of stocks in focus today. Meryl.
Well, good morning, Srishti and everybody at the studio. This is my list of stocks in news to watch out for in today's trading session. First up, coming to Reliance Industries, the company has seen quite an in-line performance for the third quarter of FY26, with their revenues and PAT both up marginally on a quarterly sequential basis. Similarly, HDFC Bank, also with a performance in line with street expectations, they have seen net interest income up almost 6.4%, while PAT and asset quality actually has been flat on this counter. Next up, ICICI Bank has seen slightly below consensus expectations performance for the third quarter earnings. Their net interest income is up 7%, but their PAT was actually down, and this was due to one-off provisions. The RBI has also directed the bank to make standard asset provisions additionally. RBL Bank as well, moving on, has seen negative expectations. Their net interest income were in line, but their provisions were higher, almost a 30-odd%, leading to an earnings miss on this counter. Next up is Wipro. This company as well has reported quite an in-line performance for the third quarter. Revenues were up marginally quarter-on-quarter basis, but their PAT was actually down 3.6%, also on the back of new labor code impacts. A lot of companies have been seeing this new labor code impact charges in the third quarter earnings. So Wipro as well suffered from this, reporting revenues, reporting their third quarter performance, therefore just in line with expectations. They've actually guided for a fourth quarter revenue growth of 0 to 2% in constant currency terms. So something to look out for on that counter. Next up is Tech Mahindra. This company has actually done pretty well compared to street estimates. Revenues were up 2.8%, while PAT was down 6.1%, as I said, again on the exceptional loss on the back of these labor code changes. Next up is Sobha Realty. This company had quite a negative quarter here. Total bookings grew 52% year on year, but this was still below estimates for the company's guidance. Next up is, and revenues all as well on this counter were down 23% year on year. PAT also down almost a 30 odd percent year on year basis. Next up.
All right. So these are some of the stocks that you should be watching out for in today's trading session. But along with that, let's also tell you which are the other stocks that are going to be in focus today. And first up is JP Chemicals, a decent set coming in by the company when the consolidated profit has seen a jump of 22% on the YOY basis, while the margins have also seen an improvement, and 27.8% is what the company has reported. With respect to the results, even Jindal SAW will be in focus, wherein with respect to the revenues, that is actually down almost 6.5% on a YOY basis. So that's not quite interesting. But other than that, is the profit that has seen a sharp decline, wherein 49% of degrowth in the profit is what we have seen. Even EBITDA is seen to be down almost 35%, with margins also seen to be a bit under pressure. Interglobe Aviation will be in focus as well, because after all that happened with respect to the flight delays on Interglobe Aviation towards the fag end of 2025, it is DGCA now coming in action, wherein they have come out with a penalty of just 22.2 crores for all the disruptions that airline was seen to be facing, while they have also said that the airline will have to furnish a bank guarantee of 50 crores as well. Now, CG Power will be in focus as well on the back of a positive news flow with respect to their data center foray, as the company has won of 900 crores worth of an order from Tallgrass for power transformers. And GR Infra will be in focus as well, as they have come out to be the lowest bidder for 487 crores worth of project from NTPC for BESS in Maharashtra. Engineers India will be in focus as well, as they have signed a deal agreement valued over 350 million with Dangote Group and Chambal Fertilizers. Lastly, let's watch out for this counter on the back of completion rescheduled of the technical ammonium nitrate and weak nitrate acid project that is there in Rajasthan. The company is citing delays caused by the EPC contractor, so not a great news coming in from Chambal Fertilizer.
All right, so those are all the stocks that you need to watch out for in today's trading session. But we'll move on to the union budget that will be tabled on the 1st of February. The countdown has already begun. Rajat Mahajan, who's the partner and automotive sector leader at Deloitte India, joins us with his expectations from this year's budget. From policy support to growth drivers for the auto space, he lays out what to watch out for. Let's listen in.
Government has taken significant measures in the recent times by introducing measures like GST reduction, PM e-drive extended to March 2028 for e-buses, and upfront discount for e-trucks. I think in the upcoming budget, the government may want to consider the following measures across taxation, demand, supply, and public interest areas. This is probably level playing field for NEVs beyond EVs like PHEVs and RE range extenders, etc., including EV and ecosystem as part of priority sector lending, right? Incentives for R&D investment in electrical and electronics areas like ADAS, end-to-end architecture, battery chemistry, motors, and MCUs. Battery recycling and circularity is gaining traction, and it is important that the government considers it right now. Relaxation of PLI schemes to ease DVA calculation, multi-layered approval structure to avoid delays in disbursements. Then there are a lot of tax measures which have been very beneficial, as I said earlier. However, going forward, the government may consider treatment of income tax credit regarding compensation cess. While the GST has been revised downwards, the inverted duty structure still remains and is blocking working capital. So something has to be done there. And HSN streamlining to avoid any kind of confusion. I think these are the three areas important from the tax perspective. Finally, the industry will expect measures with respect to public safety, with respect to imposing traffic discipline, awareness and training on traffic rules, which is very important for the government as well as for the people and the industry as a whole. And finally, upskilling of labor to deal with these new technologies like software-defined vehicles.
All right, but with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We'll be right back on the other side.
In association with SBI, the banker to
Part of it, with a capacity of over 4.6 lakh tons per annum, this facility powers both domestic demand and exports. As India pushes manufacturing and infrastructure, Ankur Mishra takes us inside the plant to see how aluminium is made and why this metal is critical to India's growth story.
We are at the Angul plant of NALCO, where the smelting is being done, and you can see the casting chamber 1 is functional here, where the molten form of aluminium is being converted into various products. Now, which are these products? These products are standard ingot, which is the standard size we have been told is 22.5 kg, and there are other kind of ingot too, which is alloy ingot, T ingot. Overall, the smelter capacity at Angul is 4.6 lakh tons per annum, and alumina is converted into primary aluminium through electrolytic reduction. The molten form of aluminium is rooted from the pots, and there are two divisions majorly. One is the casting units for ingots, SAW ingots, T ingots, and other one is rolling products units for rolled products and aluminium strips. Now, aluminium products are sold domestically and also exported, and exports are routed through Kolkata, Paradeep, Vizag port. The salient features and technology includes, overall, if you talk about 180 kiloampere cell technology is being used in these products, but more importantly, let's talk about the capacity. The capacity is 4.6 lakhs tons per annum. And what is the plan of the company? The company aims to double the capacity. When it is happening, it is likely to happen in next 4 to 5 years, we have been told. And the idea is to move towards doubling of capacity from this particular plant. Why so? Because company wants to become Maharatna, and smelter plant will contribute into it.
But beyond the plant, the big question are about the scale, prices and demand. Aluminium prices are under pressure globally, even as India's domestic consumption remains strong. Ankur caught up with Bijendra Pratap Singh, who is the CMD of NALCO, on production targets, expansion plans, export risks, and why he believes that volumes will drive the growth in the years ahead. Let's listen in.
As far as our physical performance is concerned, till Q3, we have done best ever physical performances in all areas, in alumina production, in metal production, and in sales also. So our revenues are going to be good. And as far as our Q4 is concerned, in Q4 now the metal prices are good. Metal prices are also going high. LME is around more than 3100. The concern is alumina prices. Alumina prices has gone down. So that is the area of concern, but we have increased the volume of alumina. That is the area we have improved. And whatever the reduction in prices of alumina, which has led to the reduction in our revenue, is compensated by increase in volume of the alumina. Because last year we did alumina around 20.5, and this year we are going to do maybe 22.5. So reduction in prices will be compensated by volume. So we are trying to match the financial figures of last year, and we are very much hopeful that we will be able to cross that figure, and we are keeping our fingers crossed.
Definitely. Let's talk about the current numbers. In Q3, highest number of sales, if you talk about the alumina, highest number of production you are saying. What is the ground reality saying? Is Q3 looking very well?
Yes, Q3, our physical performance till Q3 has been very good. Our revenues also will be good. It will come maybe by month of this month end. And since our efficiencies were also good, the cost was also on the lower side. That's why we are hoping Q3 will be better than Q2.
Right. And in terms of cost, as you mentioned, while aluminium prices have been on uptrend, alumina prices have seen some kind of fluctuations. How do you manage that, and what are the assumptions you are taking FY26 and FY27?
Of course, alumina prices, the pressure will be there because there is an excess of alumina in the market. And going to the next financial year, the similar kind of situation will be there. Average alumina prices, which we are hoping is somewhere around maybe $320, $330 we'll be getting. And we'll be adding 1 million ton more from our refinery. So the prices on the pressure will be there. So what we are thinking is to increasing the presence of selling more and more alumina in our domestic market. The presence in the domestic market is less now. So our marketing team is exploring more sales in the domestic market, because a lot of alumina requirement in the domestic market is also there, where fused alumina in the refractory sector and all that, which is getting imported. So that area is a gray area for us that we have to increase, then only we will be able to survive as far as alumina is concerned. Of course, metal volumes will be almost similar kind of thing, for like 70,000 next year also we will be doing. And going for the prices, the LME will be good, because the consumption of aluminium in the market is there. Some capacity reduction of smelter has been there. So the demand supply will be there, gap. So the prices will be somewhere around LME hovering around 28, 29. That will be good for revenue, because our 70% of revenues are coming from the metal.
Mr. Singh, you've completed around 1 year in office, and 1 year of turnaround has been there for NALCO. At least the stock prices are saying so. Now, for the calendar year of 26, I'm not talking about financial year, which are the things which are going to commission in 2026, whereby your long-term plans are actually getting fructified?
First, what you're telling, the 1 year completion, the kind of numbers which we are getting, I will give the contribution to each and every employees of the NALCO. It is their hard work and all our stakeholders' support from the ministry, which has led to this journey of NALCO doing very good. All our financial and physical performance has been good. This year, we are going to commission our 5th trim refinery. Our target is maybe June, we will start the commissioning process, and it will take maybe 2-3 months to complete the commissioning process. And this year we are targeting around maybe 5 lakh production from that refinery. Pottangi mines is another area where we have to start the Pottangi mines, that is 3 million ton mines. Already MDO award is awarded. MDO is in the advanced stage of operation. And it is assured that maybe June we will be starting that mines also. Initially the road transportation will be there, and we have to construct around 18-kilometer conveyor that will take maybe 2.5 years. And once that conveyor is commissioned, it will come to the full-scale operation.
Right, we discussed about 26. Now let's move to the 5-year plans which was set by the company. One of them has been the capacity expansion, which you have discussed, around 30,000 crore. I want to understand how much of that plan has actually been delivered. You discussed about what is going to happen in 2026. Is there going to be more capacity expansion? Because even the ministry has been asking for increasing the capacity, the kind of demand which is going to be there.
Yes, as far as the vision document, if you see the kind of projections which has been given in the vision document, is that by the end of 2030, the consumption of in India, the aluminium consumption will go to around 8 million ton, which is presently around 5 million ton. And by 2040, it will go to 18 million ton, and by 2047 to around 28 million ton. The kind of consumption increase projection is there. That's why it's very important for us to increase our productions. Our present capacity is 0.46 million ton. Our plan is to add 5 lakh tons of smelter, that's 0.5 million ton by 2030-31. After that also we will be having around 1 million ton excess of alumina. So further we can go to adding 0.5 million ton more, converting this alumina into aluminium, because anytime selling aluminium is more profitable than selling alumina, because alumina is excess in the market and many refineries are also coming, and revenue maximization is there in aluminium production. That's why once our this project of 0.5 million ton goes maybe ahead, we will think of going in for one more smelter of 0.5 million ton.
All right, but with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
In association with SBI, the banker to every Indian truly.
सेव पूरी एक्स्ट्रा सेव
or
It was penciling in. The revenue came in at 4.1% higher at 1.69 lakh crores, and the profit rose marginally to come in at 22,290 crore rupees. Now, Reliance Jio's ARPU, meanwhile, came in at 213.7 rupees. ET Now's Sajith Mangat was in conversation with the market experts to decode these figures and all the number crunching. Let's listen in.
Well, I think more or less in line, barring the refining business and oil and gas business, there's been a slight downward tick. I guess it should be one-off. But on the telecom front, on the oil to chemicals front, on the retail front, they opened up record number of stores on the retail front. And even the ARPUs have up by almost about 5% plus, which is, and of course, the subscriber base is at a record level. So I guess this should improve as we go into the fourth quarter in the next financial year. I don't think one needs to complain about the numbers, whatever is flashing in front of me right now as I speak to you.
Naveen, what's your first take on the numbers coming in from Reliance?
Yeah, so overall the numbers, if I were to look at the segmental EBITDA, I would say that they're kind of in line. So we were expecting around 16,500 in O2C business. That's about there. The upstream business around 4,800. That number is similar. Of course, Geo numbers are a slight beat to what we were expecting. We weren't expecting a serious ARPU uptake, so the ARPU number looks good. Overall, the numbers look broadly in line. I would say okay, but let's say the consolidated EBITDA is what we have to work out. I think expectation was in the range of around 48,000 crores, so between 48 to 50,000 crores. Maybe that number seems to be a slight miss, right? So we have to look at that number, why it's happening. Third is the retail EBITDA. I would say that number is not particularly great. So around a little lower than 7,000 crores. I would say that that's not a very, very encouraging number. But of course, there have been higher number of store openings, although those things would have led to costs. So overall, in line set of numbers, operating performance looks fine. So I would say that decent set of numbers.
All right, but along with that, it was Wipro as well that reported its numbers, and they have actually gone ahead as well as increased their IT revenue guidance. But along with that, the numbers were a tad bit lower versus what the street was estimating. But Wipro CEO Srini Pillai underscored how the Harman DTS acquisition has accelerated the AI-driven product innovation for clients. And speaking at the presser, he also highlighted a strong and a steady pipeline going forward. Listen in.
Clearly, if you look at the bookings, as far as the TCV is concerned, for quarter three, we were at 3.3 billion. However, if you look at from a YTD perspective, we were around 13 billion, which is a 25% year on year. So from that perspective, I think, the trend of our pipeline continues. In fact, today, if you ask me, the pipeline is very strong. In fact, it's a combination of both large deals and smaller deals as well. And this is also, again, secular across the markets and across the industries. And if you look at the kind of pipeline that we have, I would classify one is clearly vendor consolidation, continues from 2025 to 2026. With this acquisition now complete, we have added engineering and AI capabilities that truly complement what we do. This, in fact, strengthens our engineering global business line and helps us accelerate AI-driven product innovation for our clients. In fact, this integration also opens new regions and high-growth industries and allows us to take on larger and more complex transformation programs. As our teams come together, we look forward to entering new markets, building deeper client relationships, and turning innovation into long-term value.
All right, so that was about Wipro, but do note that the ADR on Friday was down more than 5%. So let's watch out for what sort of a reaction that the markets can give on Wipro earnings because even the brokerages are not that enthused by the earnings. But on the flip side, it's Tech Mahindra that has come out with a stellar set this time around, wherein the company has delivered Q3 numbers better than the estimates, not just on the revenue front, but also on the operating margin front as well. They have recorded the highest deal win in the last 24 quarters, including a mega deal of $500 million. And that's indeed very much encouraging, is what even the analysts are liking at this point in time. With respect to the brokerages, definitely it's sort of a turnaround in the telecom business that the company has highlighted, and it's been liked by the street as well. The margin trajectory is intact. The mega deal in Europe specifically, the one that we were talking about, marks a turnaround in the communications for the prolonged period of decline. But along with that, with respect to the guidance, the company has actually maintained its FY27 guidance, and that is what even the brokerages are liking at this point in time. Well, of course, the company has beaten the street estimates by a big margin. So that's about the TechM earnings. With respect to the internals, is the EBIT that has seen a jump of almost 11.5% on a quarter-on-quarter basis. And along with that, even the margins have seen an improvement to 13.1% this time around. So a good set coming in from Tech Mahindra. The brokerages have also given it a thumbs up.
All right, so that's the earnings and TechM, and the brokerage is also giving a thumbs up. In fact, Nuvama has upgraded the stock and also hiked the target price. So we'll see how that moves in the trading session today. But earlier we spoke to Aditya Shah's Gaurang Shah and Avnish Gorakshekar about how the earnings are going to impact the markets on Monday morning. Let's listen into what they had to say.
Normally, whatever we've seen up till now, whether it is IT sector companies, the numbers, Q3 numbers, or whether it is HDFC or likewise others, normally what my understanding is, large part of the impact is taken in one particular quarter and then they phase it out in small parts. So had it not been for this, definitely, I mean, 500-600 crores is not a small number, Harsh. It would have been definitely much, much better. But this had to be done. And I think going forward, you will see many more companies doing this kind of adjustment with respect to the new labor code.
Interesting. Aditya Shah, net interest margin 3.35%. I come back with regard to the margin number back to you. How do you assess it?
So steady, nothing, no upside to it, no downside to it as well. They are maintaining it. But as everybody has been discussing, the real regainment of the HDFC Bank stock will only come when they come back to about 4% margin, which I don't see at least for the next 2.5, 3 years happening. So steady set of numbers, nothing to complain about. In fact, I expected very, very steady kind of a number. And more importantly, apart from anything else, asset quality continues to remain extremely robust, which is really a positive. So now, if the asset quality is maintained, the NIM is just an upside trigger for HDFC Bank.
All right, so that was about HDFC Bank, but when it comes to ICICI Bank, it's the leadership overhang that is seen to be subsiding. Once again, Mr. Bakshi will be taking the reins of ICICI Bank, but with respect to the earnings, a marginal miss versus the street estimates, what we have seen. But we spoke with Avinash Gorakshekar, Aditya Shah on how the earnings went by. Let's go across and listen in.
See, even Sachin does get a low score at some point in time during his career. The slippages, we need to first understand from the management how many of them were one-offs and how many were actual slippages that the bank experienced. That will give a clear outlook on where the stock price would really move. As I said, estimates, what estimates are, how the bank performs are two different stories. From my perspective, yes, there is a little bit of elevation in slippages. But first, we need to understand the nature of those slippages and then comment if the results were good or bad. As I said, the stock could take a little bit of downturn on Monday morning, but from there on, it will recover. The stronger point is loan growth is fairly okay, deposit growth is fairly okay. Slippages, we need to understand where are the slippages coming from. I think that is the main point for ICICI Bank. In any banking result, it is more important. But given the stability at ICICI Bank, only asset quality will decide what really happens. And the details of that will come on the con call.
Perfect. Okay. Avinash, let me come back to you. this entire leadership reject. We've been through a painful grind where ICICI Bank is concerned because of a possible overhang of Sandeep Bakshi not getting that 3-year extension or not opting for it himself. 2 years is now what has been disclosed. A hit, a miss, what is it for you? Is it a positive? Is it a negative?
No, I think, my guess is that it's a mild negative because clearly post, Sandeep Bakshi coming, the bank had definitely shown a very strong kind of improvement in its operational metrics. But I think why his extension has not been given a 3-year and he's given a 2-year, I think something which I think we will not be able to analyze as of now. But typically, in a bank like ICICI Bank, there's a very good leadership kind of stable already there.
And before the budget numbers hit, here's a quick look at the budget basics, where the government's money comes from, where it goes, and how the deficit are financed. From taxes and borrowings on the receipt side to interest, defence and subsidies on the spending side. This is how every 100 rupee of the budget is raised, spent and balanced. Sneha is joining us with the explainer. Let's listen in.
Well, yes, the union budget is just around the corner, and let's understand how the government makes its money and how the government spends its money. So when it makes its money, it's called budget receipts. Let's understand this. Let's put it into context by seeing for every 100 rupees that the government makes, 24 rupees comes from borrowings and liabilities, 22% or 22 rupees rather is contributed to by income tax, 18 rupees comes from GST, 17 rupees comes from corporation tax, 9 rupees comes from customs and excise duties, another 9 rupees comes to non-tax receipts, and the last 1 rupee comes from non-debt capital receipts. That makes up a pie of about 100 rupees of the government's income. On the flip side, let's see, if the government is spending 100 rupees, then 22 rupees out of that is going towards state's share of taxes and duties, 20 rupees goes for interest payments, 16 rupees make up central sector schemes, excluding defence, and major subsidies are part of this. Defence spending is 8 rupees out of the entire 100 rupee pie. Finance and commission make up another 8 rupees, other transfers make up another 8 rupees, and centrally sponsored schemes also account to 8 rupees. The last 10 rupees come from major subsidies and pensions, 6 rupees from subsidies, and 4 rupees go towards pension. So that makes up a 100 rupee pie when it comes to government spending. Let's understand some important terms, 6 very important terms to know to understand what the income and expense look like. Let's talk about revenue receipts, regular recurring income of the government. They neither create a liability nor they reduce any government assets, and this include income tax, GST and non-tax revenue, that's dividends, profits from PSU. So that's tax and non-tax revenue, both are part of revenue receipts. On the flip side, let's understand what capital receipts are. Non-recurring funds received by the government that either create a liability or reduce assets. They could be government loans or the disinvestment proceeds, for example. Next up, let's understand what government capital expenditure is. Money spent on creating or acquiring long-term assets, could be road, building, machinery, defense and the infrastructure of the country. On the flip side, revenue expenditure is money spent on day-to-day activities of the government, daily operations, essential public services and administration, like salaries and pensions for government employees and subsidies provided. So that's an example of that. Fiscal deficit, on the other side, when a government's total spending exceeds its total revenue, excluding borrowings in the financial year, it means the government is working in a deficit. And on the flip side, lastly, a fiscal surplus is when a government collects more revenue, that is primarily in the form of taxes, than it spends in a financial year. So the government's income is more than its expenses, which is rare to see. But yes, that's the meaning of a fiscal surplus. And these are some important terms you need to know just as we're nearing the Union Budget 2026.
All right, thank you so much, Sneha, for getting us all those details. But with this, viewers, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Ankita and the entire team. Thank you so much for tuning in.
Nice, yeah?
Hey, Mahi, suggest a cool bank जो environmentally conscious हो.
SBI, coolest है.
Really?
SBI ने लाखों पेड़ लगाए, वेस्ट मैनेजमेंट प्रोजेक्ट्स को फंड किया, EV लोन्स पे कंसेशंस दी और रेन्यूएबल एनर्जी को मैक्स सपोर्ट किया.
How? That's cool.
SBI, the